Finding value in today's volatile market, our next guest helps manage about $4 billion and has been in the value investing game for more than 2 decades. His largest and oldest portfolio returned an annualized 8% in the past decade, compared with a slight negative return in the S&P 500 index. So where are your best value plays right now? Tom Russo, partner at Russo, Gardner & Russo, joins us live from the Value Investing Congress in Pasadena. Okay, Tom, what do you like?
Trish and Larry, today is a great day for global value investing. It's not a very great day for global value investors because we have to endure the declining currency and the current chaos in share prices around the world. Today's a pretty bleak day in the markets. It's accordingly great time to be investing abroad. The international area is the area that I spend most of my time focused on. And there you have population growth, you have income growth, and you have the increasing preference for consumers to move towards brands and to advance. So it's really an international story.
When you say international, are you talking about Europe right now, or are you talking about some of the more emerging market areas?
Well, European companies are the focus of my investments. So there'd be Nestle, Heineken, Unilever, Pernod Ricard, a host of international companies based in Europe. And the valuations are low because of the fear over European decay and declines. But their greatest prospects are their ability to invest to develop their brands in emerging and developing markets.
Tom,
so
walk through.
It really is both stories.
Which ones, Tom? You went through that pretty fast. And I want to ask you some more. But which ones did you put on the table?
Sure. Well, I'd say Nestle is a global leader, and it's rich balance sheet, strong brands, and it's been in those markets all over the world for the past 100 years. So they have brand equity, and they become aspirational when people have incomes to spend.
And you mentioned
Unilever. A similarly profiled company. The spirits brands and the beer companies, whether it's Heineken or SAB Miller. In the spirits industry, it's Pernod Ricard, Diageo, Brown-Forman. Brown-Forman's based in the U.S., but it still enjoys the same exposure to those markets that are growing.
What else do you buy? What else do you buy? What else do you buy?
Philip Morris to target the same consumer, and in the U.S., Berkshire's, I think, our largest holding. So that's a domestic story. The fact that Europe is as weak as it is in some measure the consequence of the fact that economic activity is growing in other parts of the world. And so you want to make sure that you stay with where the growth develops and with where the consumers will grow.
Well, Tom, I'm just curious. I mean, you're talking about buying some of these European companies right now at a time when the countries are clearly struggling. You look at what the markets have been doing as of late, and it doesn't seem like it's a trend that's going to stop tomorrow. Are you advising that investors jump in right now, or that they maybe wait it out a couple weeks while more downside continues potentially to happen?
You just can't know that. I mean, you can't tell the timing. One lesson I think about is Lord Rothschild, who years ago said, invest when there's blood on the streets. And you may not see blood on the streets yet, but certainly in Greece you're seeing riots on the street. In Spain, I'm not sure quite how they're handling this recent downturn, but there's a pretty severe discrediting. The flip side, for American investors, understand that there's very little place to hide. If you want to tap those same markets through Coca-Cola or Colgate, Palmolive, you're going to have the exact same issues with currency confront you as an American investor trying to tap those markets with U.S. companies. You have to look for the best management team, the best brands, the best balance sheet, and the best commitment to growth in companies, whether they're U.S.-based or internationally based.
Tom, just real quick, from the standpoint of value investing, which is an important discipline, how did you handle the meltdown in stocks in 2008, early 2009? Do you get rid? Do you start dumping? Do you hedge? What do you do?
I sold a tremendous number of U.S.-only domestic companies. Right. And in 2008 particularly, the emerging market story deflated, and the international global companies went down considerably. And so we rotated capital from domestic companies that had limited reinvestment opportunities to global companies whose share prices went down in an exaggerated fashion because the emerging markets collapsed.
All right. I got to leave it there. Tom Russo, thank you very much for helping us out.